Investors and traders, welcome to the channel. Market chart pattern today is 25th of April 2024. I hope everyone is having a good day. In this video, it'll be a quicker video. We'll just go through the key US markets by taking a look at the bond markets through the eyes of the bond futures. And then we'll take a look at the US dollar, a brief look at the gold market, and then we'll dive deeper into the uh, stock indices. The market is doing from a price perspective. This is what we are going to discuss. As always, this video is for educational purposes only. It is not a financial advice. So let's start with the chart of looking at the shorter term 2-year treasury note. So this is the treasury note daily chart. It's in the yield format. So what we have on the y-axis is the yield. So the yield is hovering around the 5% mark, and it's just been rising. This just shows that what the market is expecting is that the interest rates are likely to remain higher for longer, and this is now getting reflected. There's pretty much quite a lot of resistance around the 5% mark, and I believe if it begins to move above 5% on the 2-year note, then it will actually make some headlines as well. So really watching this one very carefully. Now on the longer end, we'll take a look at the long bond futures. This is the 30-year duration. This is daily chart of this bond futures. We are watching for this pattern formation with points, possible point C here really carefully. We did get a rally of a few points, but it's just not been able to get above the 38.2% retracement, coming in around 116. And now, in my opinion, this pattern is actually maybe invalid, or it might actually be making a double bottom here. Tomorrow is Friday. We should get the confirmation. And if this pattern breaks, then we do have the 78.6% retracement coming lower, but it just means that the market is pricing higher interest rates to remain for longer. Personally, I believe we might still get a couple of interest rate cuts this year in 2024. I'm not sure about the timing though, but it's just my opinion. We'll have to wait and see. But it looks like longer end, the market keeps on going lower and yields higher. Now let's take a look at the US dollar. The US dollar has seen weakness come in this week, and as we had discussed in the weekend report, we think we're leaning more towards the weakness in the US dollar because of this pattern formation here, and also this key zone that we had talked about. Initially, 107 was the target to challenge these tops around here. But it might not happen, and we have this wedge formation, so we're just watching this one. The key thing is that if this trend line joining this one, this bottom of this breaks to the downside, then we could see more acceleration to the downside. But it looks like the dollar is getting weaker. Now, if we look at the gold market, the gold market has had a tremendous move throughout the month of March, and the central banks have been buying gold in record, and that's why we have seen a pretty strong move to the upside. And then from the beginning of 22nd of April, that's the beginning of the this week, we have seen weakness come in this market, and it's just possible that the market could correct down to about 38.2% retracement, coming around 22.75 on the COMEX gold. This is not the spot gold prices, these are the futures prices of COMEX gold, which is basically the bottom, which came in on the 14th of February 2024 to the recent highs. So that's possible. Now let's move into the stock indices. Something really important happening here. So the correction continues. Actually, we were watching for this really key level to come in, which came in around pretty much around the 61.8% retracement. We have discussed this one in our weekend report. Now, what we are watching for is the market retracing higher. So we were watching for a key level and a possible bottom to come in, which did happen. That was around Friday the 19th. Now, this rally, we are really watching what this rally is going to do now. And 5107.50 is the 38.2% retracement. So the market actually got there on 24th of April, which for Wednesday for this week, and closed lower. And then today we have had a nice rally take place, and it's the market closed higher, so that's good actually. I just want to quickly show you on an intraday chart something that I was watching. And what has happened actually is market had made, you see this move from Friday bottom to the highs which were reached on 24th. If we just draw a retracement, this is something I've already done here, we can see that the market came right to the 61.8% retracement. And there's also this ABCD one-to-one price projection right here as well. And that's always something we watch when we have a confluence of two or more things coming together. So just want to show that these kind of patterns that we look at, they just don't not only work on daily charts, which are the longer term charts, but also on intraday level as well. So off that, we saw a really nice rally for, I think the market rallied about 100 points, which is roughly about 1,000 points in Dow Jones. So pretty strong move to the upside we have seen from the 61.8% retracement level. Okay, now the possible scenario is that, let me actually bring in the 61.8% retracement. And if this move is going to unfold to the upside, for example, in an ABCD format, so we take this and we clone this. So that's going to be the one-to-one price projection. So we can in fact go as high as 5194.50 or even 5200, which is an even number. And if the market begins to actually get into strong resistance around here, then the correction actually continues. And in my opinion, not getting above the 61.8% retracement, the market, if begins to move lower, then we could have actually a prolonged pattern formation in which the market, if to complete the correction, might begin to drift lower, but take more time. That's because this 38.2% retracement level, market would, by going above it, what it is showing is there is enough strength in the market that so much of this downdraft was actually taken out to the upside. And of course there is possibility that this might actually have been a pretty good low, and the market goes and for make another all-time high as well. But we have to take these scenarios and watch for them. So this is what we will be looking at. Now let's quickly take a look at the NASDAQ futures. This is daily chart, something similar here, a slightly different pattern. This market also closed above the 38.2% retracement, which came around 17,725. Is really good. Now it could get up to maybe the 61.8% retracement or around the structural low. So let me actually draw this around here. So roughly about 18,000 level is possible, where we could see the market go. We have the one-to-one price projection coming around 18,000. So we'll have to watch and see how the market price action will unfold. If the market is moving in ABCD, which I think it is moving in that pattern formation. Now, a quick look at the Dow Jones. So the Dow Jones index, as you can see, it's weaker because the S&P 500 on futures and the NQ futures, they closed positive, but not this market. So again, if we just draw a retracement, we can see the support came in right at the 61.8% retracement for this one. And yes, so the 38.2% retracement is the market had actually closed above it a little bit. And let me draw the 61.8%. Here we go. And let's see if we get a one-to-one price projection possibly around there. And there we go. So just like the S&P 500, 39,250 could be a level if the market is moving in an ABCD formation, which probably it is. So as long as the C point is not broken, which is around roughly 37,900, this move could actually go till 39,200 and 50. Last but not the least, Russell 2000. Russell 2000, like the Dow Jones, is a little bit weaker compared to S&P 500 and NASDAQ. Here the move was around 50%. 50% is 61.8% retracement. The 38.2% retracement comes, let's take a retracement around here. So the market actually closed below that. So we already know this index is weaker than the S&P 500 futures and the NASDAQ. Again, the ABCD could take us to 2070, where we'll have a confluence of two things coming together, the one-to-one price projection plus the 61.8% retracement. So again, looks like the markets are moving in this rhythm. And then let's also take a look at the NYA, which is the New York Stock Exchange Composite Index. It also includes 80 hours, and today's support was it just missed the 61.8% retracement by about maybe 30 points. And if we were to look at the retracements, so this one has broken above on one occasion above the 38.2% retracement, which is a good sign for the bulls. And possibly the bulls might be able to take it to, again, with this formation around roughly maybe even up to 18,000. So we'll have to wait and watch and see how the price action will unfold. So really quickly, summarizing this, let's go back to ES. Market found support today from the 61.8% retracement. The chances are that we are actually moving in this one-to-one price projection ABCD formation right to the 51.95, where we have the 61.8% retracement. And the market actually today on the 25th of April closed above the 38.2% retracement and also took the highs out of 24th of April. So that's good for the bulls. So a really short video today. Thank you very much for watching the video. And if you found this video of educational value, give it a thumbs up. And if you like how we do the technical analysis here on this channel, then please do subscribe to the channel. Thank you very much. Good luck, good trading, and speak to you guys soon.